Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's October 14th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. You know, I started Curzio Research to help the little guys. Mom-and-pop investors, millennials, help them stay ahead of Wall Street. I've been through the grinder in this industry, having over 25 years experience, which includes actually working on Wall Street, right across the New York Stock Exchange. Managing money with my late dad, who had over 30 years of experience managing money and writing newsletters. So I grew up into this business. Working side by side with Jim Cramer for 5 years. And working for the largest independent financial newsletter publisher in the world for another 5 years. But I've seen it all. To the point where I can teach you how to avoid all the BS storylines, the pump and dump schemes, tell you who's full of crap and who isn't. Teach you how to research stocks like a pro, learning from my mistakes. If you're a subscriber to any one of my newsletters that I write, Curzio Research Advisory, Curzio Venture Opportunities, Crypto Intelligence. I used to send out 10-page reports of all my research in PDF, but now we changed that format pretty much a year ago, 9 months ago, and made it a video format. And sometimes these videos take 30 to 40 minutes. You might think it's boring, it's crazy, you won't watch it, but trust me, in those videos, I share everything with you. I'm sharing my screen. I'm showing you exactly why I'm recommending a stock. I'm not just throwing out a note to you and saying, hey, buy this. I'm showing you what sources I use, which can be very, very expensive that most people don't have access to. Just like if you're a professional in your field, you have access to the best tools, the best products. Same here. I go over my methodology, which is different for every pick. Sometimes it'll be based on value, sometimes growth, sometimes income, sometimes momentum. I'll highlight different metrics that matter depending on the company or industry. It's not the same metrics all the time. You can say sales and earnings trends. Yeah, of course. But if sales and earnings are going a little bit higher, but your subscription growth is going lower, your stock's probably going to get nailed, especially if you're a social media company, because they're based on subscriber growth. So are streaming companies. Average revenue per user. Very, very important. How much everyone's paying for that service. Same store sales is the biggest thing for retailers. And your same store sales go through the roof. Usually you're going to beat your earnings, but that's a big number you want to see. Insider buys. Which ones you need to pay attention to and which ones are not really that relevant. There are some that really don't matter. Show you why it's important to pay close attention to the consensus estimates, which is what? It's the sentiment of what the street, Wall Street, thinks about a stock. When I say Wall Street, it's all the analysts, institutional analysts who cover the stock. They all come out with their consensus estimates, and then you come up with the mean and what they're going to generate for the quarter, and sometimes they could be super conservative. So, you could see on TV, when you watch on TV that, JP Morgan just beat their number, or Google just beat their number. That number is the JP Morgans, Goldman Sachs, Morgan Stanleys that cover the stock. They all provide their estimates. So a lot of times you'll see, well, they beat the consensus estimates, the stock will go up, but those estimates are so low, they're still, from last year to this year, some companies have seen revenue decline 30%, but they beat the estimate, so the stock's going to go higher. But it's important to understand the consensus estimates. Because if you think the street is wrong, that's how you make the biggest returns, by going against the crowd. In these videos, I also provide a buy up to price on every stock, as well as a stop loss. You always want to limit your risk. But you see my entire process for picking a stock, which includes in-depth analysis on every single name I recommend. So I'm not just sending you, hey, here's a text, a quick note telling you to buy Caterpillar because it crossed a 200-day moving average and it's a buy. Information you can find on over 100 free sites that people love paying for. Again, that's one of the ways I highlight when people are bullshitting you. Why should be paying people to give you that information that you could find on 100 free sites? But for me, I love helping people. It's what my late father did with his business. It's what Kramer does. A lot of people have different opinions of him. Believe me, he cares about people. I know this is a guy that went to my wedding, helped me out tremendously in my career. I've seen how mad he gets in his office when he gets things wrong, and he's not allowed to own these securities. So he's getting mad, which I like to see because that means he cares. If he didn't give a shit, he'd go out, go to dinner. Who cares? And I see that a lot in this industry. People just shout to the top of the moon their thesis. They won't even look at any of the facts. It's always the same thing. Inflation, 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 inflation for 15 straight years. The market's going to crash, 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 crash for the last 10, 12 years. Revising that book. Doesn't matter about the data. Doesn't matter low interest rate. They don't care. In the meantime, they're selling books. They're making a fortune. You listen to these people and you're getting crushed. As you can see, I'm passionate about that. And helping people, doing the right thing by investors has allowed me to grow my network into one of the biggest in my industry, where I interviewed well over over 1,000. Think about that. Over 1,000 market experts, analysts, economists, scientists, doctors. I mean, you heard it all. If you've been listening to this the past 13 years, I've been doing this. Billionaires. I think it's 5 or 6 now I interviewed. And helping the little guy also makes me feel good. I mean, it brings me joy. I know that sounds so corny, but it allows me to sleep well at night. It allows me to look in the mirror and be proud. It gives me a sense of pride when it comes to my 2 young daughters, right? Knowing that they're always watching me. It's important to me. Yet, the process of bringing you that information, which you see, hey, this is what I'm doing, this is what I'm recommending, right? That's what you see. Behind the scenes, everything that happens and things you don't see, this process is kind of ruthless. It requires asking a lot of questions to management teams. It requires boots on the ground, traveling to see facilities, mining sites, where I'll look at the management team in the eye and tell them, you know what, there's no way I'm recommending your company to my subscribers. It's not good enough. And believe it or not, that happens much more than not. Because most of the stocks I research aren't going to make it into portfolio. And unfortunately, when I'm going through that entire process, it could take a few days before I realize, wow, this isn't a good name, or something really I didn't see during the early stage of the research where I'm like, wow, this doesn't make sense. It happens a lot. I'll get to, if there's in baseball terms, in innings, I mean, I'd get to the 7th inning and then I'd be like, oh, you know what? This doesn't work. It's not going to work in that process. Sometimes you see it right away. But other times you really have to dig deep. It involves talking to people who have an opposite opinion than you, which is not easy for most people to do. I mean, think about that, right? Say if you believe in climate change, try having a conversation with someone who couldn't care less and thinks you're absolutely crazy and wasting your time. It's not easy. It's not easy. And so many of those times, those conversations don't go well when you're talking to someone who just thinks different than you. Since, we're all biased in one way or another, especially if you're running your own company, and that includes me. If one of my competitors told me to my face that Curzio Research will never become an industry leader, you run a crappy company, I mean, I'll tell them to go F themselves. Just like any one of you would say the same thing, right? But finding the best stock ideas, the ones that have the most upside potential, usually come when you challenge the consensus or what everyone believes, which almost always leads to tons of criticism, doubt, anger, and sometimes feel strongly enough about something and say, if I have the opposite opinion than you, it could result in me losing you as a subscriber. You cancel your subscription, which happened numerous times over my career. I can't control that. I don't have an agenda. My job is to make you money. That's it. I don't get paid for anything else. It's subscriptions, and if we don't make money off subscriptions, if you don't subscribe to my newsletter, we don't make money. So I have to show you returns. We don't get paid by companies that recommend them. Absolutely not. I've been offered numerous times. Absolutely not. Integrity is far, far more important than that. But for me, I've always learned, and I don't know if it's a personality thing, but I always check my ego at the door. I mean, I always welcome debate. I love hearing the other side because that information is critical. It's either going to lead to me strengthening my thesis or force me to dig deeper to find out what I'm missing. If you're subscribed to Curzio Research, you know I'm not bullshitting you here because I always mention a bare thesis in my analysis, in my videos. I tell you, this is what they think. Here's why I think differently and why this stock could take off. In fact, if you're bullish on any stock, you better understand the bearish argument. You better understand it well. Don't just look at the positives. You need to look at the negatives. Or how much you could lose on your investment if you're wrong, because you're going to be wrong. Everybody is wrong sometimes. You will, and you're going to be wrong on the ideas that you have the most conviction on. It's just the way it is in this industry. The ones that you get scared of when people are emailing you, you're like, oh, shit, did I mess this up? What am I not seeing? Those are the ones you're going to be fine on. It's the ones that you're arrogant about. Hey, this is definitely going to go high, or this is definitely going to crash. All this stuff. That's when you get nailed. But you want to look at both sides, right? It's critical to everything you do. Look at both sides of that equation. For example, if you want to buy JP Morgan or Wells Fargo, which just reported, you better understand that profits are going to be hurt from low interest rates, which are here forever. Which means that these companies better find another way to make money, and they really can't right now. They really can't. Unless the economy gets better and stronger loan growth, you're seeing those provisions go higher. Those provisions are put aside for credit losses that could potentially happen. I wouldn't say likely, that could potentially happen. And take my Citigroup recommendation, which I recommended in 2018, which we sold for pretty decent profit just before the March COVID crash, which is really like the last week of February. But I love Citigroup because they're buying back nearly 30% of its float over a 4-year period. Also using money to increase its dividend. I mean, their money on their balance sheet, it was super strong, like most banks, because of the regulation, which turned out to be a good thing with COVID, right? Helped these guys a lot. Never thought companies would shut off their revenue streams by 90% to 100% over a 3, 4, 5 month period. No one ever models for that. Trust me, nobody. Fed won't get credit for that. They always get criticized, but nice job. I was pissed off that the banks had so much capital on their balance sheets and they couldn't do shit with it. They couldn't lend it out. I mean, I even had trouble getting a second loan, even though I showed everything that I could easily pay for that for a second mortgage to buy my mom a house. I had to pay cash. I'm like, are you kidding me? You see everything. You see everything here. But anyway, I like Citigroup because of it. It didn't matter if interest rates are staying low because they're buying back their float. Earnings were going to surge. And the stock did well. And we sold out of it, again, pre-COVID. And I think we sold out of it. It was in February at over $63 a share. Today it's $44. But today, Citigroup is no longer buying back their stock. Their balance sheet is not as strong. I mean, given those provisions, just like the rest of the big banks, they put aside for potential credit losses, not raising their dividend. Yeah, those are the biggest factors that supported my thesis. So it's not something I would recommend today since the landscape is different. My point here is, if you're long or short, you better understand the risks of being wrong or how much money you could lose. And the only way you're going to know that, you're going to understand it, is by embracing the other side. Listen to the opinion of someone who differs from you. Challenge everything. That's what defines American culture. It's what this country was founded on, debating to find the best outcome or solution to make this country a better place. Where am I going with this? You guys know I've been following me since January. A lot of you have been following me for decades and many years, and some are getting lots of new listeners. Thank you so much for trying this out, and hopefully we'll fulfill your investment needs. We'll promise you're going to get information on this podcast you're probably not going to find on any other podcasts or a lot of other places. But since January, I've been covering COVID relentlessly, almost more than any other analyst in the entire industry. Again, I'm not an arrogant person. I'm just being truthful. I talked to dozens of doctors, read hundreds of studies, reports, interviewed people on lockdown in Italy, China, and that was in March. Talked to numerous sources in China. It includes business owners, influential people that happen to be Wall Street Unplugged listeners. This is a global podcast. I'm honored that it goes out to a lot of countries. But having that network helped us get out of the market before the crash. And I even did a special podcast in early February where I did not have a guest. Now, I can count on one hand the amount of times I haven't had a guest on my podcast in 13 years. Rarely happens. And I came on and said, look, I don't want to have a guest on. This is a special podcast, Wall Street Unplugged, because nothing that they're going to say is more important than what I'm going to tell you right now. I actually said that. This message is important, and we could see an imminent crash in the stock market, something I never said in my 25-year-plus career. And this was based on China closing its entire economy. And it seems obvious. Right? You had Apple, Yum Brands, Levi, Starbucks, hundreds of chip companies that supply the world's biggest entertainment products, or the biggest selling entertainment, like the iPhone, Galaxy, flat screen TVs, car components. Every business in the biggest growth market in the world was closing down due to COVID. And this was public information. Companies made these announcements in early February before the market started its downturn nearly 3 weeks later. You can look at the news. Look when Apple started shutting its stores, Yum Brands. Look, it's early February. Market started crashing around the 20th. They were trading at a huge growth multiple in the U.S. because U.S. was doing great, doing fine. Yet, it was shutting down the country that accounted for over 40% of the world's growth in 2019. So the math didn't add up. But by challenging the consensus, because nobody predicted an imminent market collapse due to COVID in February or even into March, not until the market fell more than 20%. I didn't see anybody. Maybe. Again, I've been wrong on calls too, but this one I haven't seen anybody make. Telling you to get out of market 3 days before it crashed, 3 weeks before it crashed. But challenging the consensus, believing in my in-depth research, my due diligence. I was able to save people a lot of money, which is something I'm really proud of. It's the reason why you listen to this podcast, the reason why you subscribe to my products. It's my job. It's what you pay me for. I got to tell you something. It's always better to save people money than make people money. As crazy as that sounds. Because anyone can get a few picks right, and that's okay. But helping people avoid a massive loss, they will follow you forever. Just that you care about them. Because there's nothing in it. If I'm recommending something that's a buy and I'm investing in it, it's great. But say if I'm avoiding something, that there's no benefit for me by telling you that. You're going to be out of the market. But then if it happens and you save money, that's a real big deal. It's almost like you know that person has your back. We really strengthened our brand during COVID. But that's why I find it incredibly interesting when I post data about COVID on my social media feeds, even talk about it on this podcast. Because when I do, I get tons of negative feedback, which is okay. I like the criticism. It's fine. But almost like these people believe I have an agenda. Guys, I don't have an agenda. I don't care about anybody out there. I mean, I don't. If my research tells us what we should do or how do we make money, I don't care if it's one of my best friends who's a great analyst. It doesn't matter. This is about you. This is about my business. You're going to have a difference of opinion, even if you're friends sometimes. But I don't have an agenda. I just have access to information that's public, that's not being published in mainstream media, that a lot of people don't see. Like 94% of the 216,000 Americans who died from COVID since February, it's a tragedy, they also had at least one underlying condition. 94% of those people. And most of them had more than one underlying condition, whether it be asthma, obesity, respiratory problems, or like if you're under the age of 15, you have a much greater chance of dying from the flu than from COVID. Those statistics can be found on the CDC website. People get pissed when you say that. It's not the flu. It's not the flu. We're learning more about it. There's more information out there. But based on this data, my research, talking to people, that's why I've advocated strongly for schools to open back up. And believe me, I have a lot of stake saying that. My youngest daughter has Crohn's. She's taking Humira, which lowers her immune system. But based on the data, the protocols I saw that her school was taking, which are great, wearing masks, separating the desks, my wife and I decided to send her and my 12-year-old to class, which was 2 months now. Best decision ever. My daughters are interacting with their friends. Most of them are new friends since they're attending new schools this year. They're smiling, laughing, calling each other to help with homework assignments. They come home, they talk about their day with me, their friends and school. It's a necessity for kids during their growth process. being interactive with people. We've all been through it, at least most of us. But you need those interactions. And of course, not at the cost of safety. But again, the numbers, the data show that kids not only show mild symptoms, most of them, when they get infected with COVID, but also rarely transmit the disease to adults. These are the studies. And it's not just kids under 15. Anyone under 50 with no underlying conditions should view COVID like the flu, or where you definitely don't want to catch the virus, but if you do, you're going to be okay within a few days. That's what happens to most people. Not everyone, but most. 99.5%. And like him or hate him, our president is 74. I'm going to be nice and say mildly obese. So he's in the danger zone, has underlying conditions. Worst candidate, gets COVID, and it's fine 5 days later. Yes, he's the president. Yes, he receives special treatment. That treatment will be available to every American, and most of those treatments are available right now. And I'm bringing this up because I've been doing a lot of research on one particular aspect of COVID, one that's highly controversial, angers a lot of people. And we've seen people fly to airplanes because of this, and supermarkets curse and wish death on each other over this topic. And I'm not kidding. And that topic is wearing masks. You go back in March, see Fauci and other infectious doctors, including members of the CDC, again in March, said that masks are never going to work. Now, they changed their tune after looking at studies done in April and May, which you're supposed to do as scientists. You want to be able to get this thing right. You're going to be wrong. This is something new. We don't want to pick on the people who were wrong at the beginning unless they're touting how great they are and how they handle the situation, when most people at the higher ups on both sides did not handle this correctly, right? We all know that, but it was new. We get it. This never happened. This never happened. Like, we'll have lockdowns every place. But you're looking at Fauci, CDC, right? They changed their position on masks, which you're supposed to do as scientists. So be willing to change your thesis based on the data or the new data that comes out. But studies are all over the place on this now, like in most areas of COVID. I mean, did you see the estimates of people who are asymptomatic or those who are infected but never develop any symptoms? I mean, I read papers where the percentage of Americans, it ranged from 18% to 80%, depending on which study you read. I mean, what does that tell you? 18% to 80%? Give me a break. Really? That's the opinions? Doesn't get crazy or wider than that, right? Not too much wider anyway. If you take the average from 16 major studies that are from unbiased sources, they've said anywhere from 40% to around 45% of people are true asymptomatic. But they're still not sure if these people can transmit the disease. Again, another debatable topic. Whichever side you're on, it's okay, but it is debatable. Now, when it comes to masks, of course, these help droplets from getting into your mouth, breathing them through your nose when you're talking to someone who is infected with COVID. Most are in agreement with that. But droplets are pretty big. And you really have to be standing within 1 to 2 feet of someone, unless they're shouting at you, to get droplets from their mouth into yours. But when it comes to aerosols, where smaller particles can stay in the air for seconds, studies show that most masks won't stop these particles from penetrating. They could easily bypass face masks. And this is based on a study from the Cleveland Clinic, which a lot of people respect. And we saw a study come out from Health Affairs, and this is from June 26, that said it's evident that masks work. And their research is based off the growth rate in COVID cases after we mandated mask use, which was whenever? May? So this study's from June, when most of the lockdowns were still in place. So, of course, if people are at home, COVID rates are going to go down if people are home. If we fast forward to today, more and more people are wearing masks than ever. You see people with masks everywhere. Not everyone, but you do. You see everywhere. But yet the cases of COVID are rising. Now, if you're political, you're going to say, well, that's because Trump is holding rallies and most of the people not wearing masks. Look, you look at the recent rallies. Look at the crowd. Almost everyone in the crowd is wearing a mask. Some people aren't. Most of them are. For me, I'm interested in getting the truth, the facts, the data here. No agenda, no politics. And right now, I've not read many convincing studies showing that masks or mask use prevents the spread of COVID. I'm going to get tons at frankcurzioresearch.com. I'm going to get all these emails. You're crazy. Send me studies because a new study's just come out from 11 major outpatient healthcare facilities. This is across numerous states. And this study analyzed a group of people who tested positive for COVID during the month of July. It's a pretty big group, too. Because I really criticize people who are like, well, COVID's not working for these 5 people that I interviewed. Remember that on CNBC? They had that. What a joke. There's, what was it? I think 14,000 in one trial, another 10,000 another trial. They interviewed the 5 people that fit their thesis that said, oh, I feel sick after, in phase 3 of the trial. Give me a break. This is 800 people. 800 people, 18 years old. So I'm not talking about 20 or 50, 800 people who were infected. Of those infected, 70% of them said they always wore a mask, while 14% say they wore a mask often throughout the day before becoming infected. Think about that for a minute. It's 84% of people who wore masks, including 70% of that number who said they wore masks all the time, and they still contracted the virus somehow. Now, I know several people personally that have COVID who are in the danger zone. So they were over 70 years old, and they wore masks every day. And I'm talking about these personalized masks that covered their whole face to where you could barely hear them talking, which is good. They want to be protected. They're in a danger zone. These people wore these masks religiously. They all got COVID. And most are doing okay, with the exception of one who had underlying conditions. She's not doing well, and my prayers go out to her. She's the wife of my daughter's former principal. Very nice lady. But I'm seeing more and more people who are wearing masks contract COVID. And where am I going with this? I'm not telling you not to wear masks anymore. I'm wearing a mask at every place I go to that's publicly, that's indoors. I'm doing this because it makes people who are in the danger zone feel more comfortable. Not because I'm afraid of catching COVID, which I'm not. I don't have any underlying conditions. My daughter catches it. We could take her off Humira for a few weeks. That's what the doctor said, since it's a very small dose right now. But I'm not worried. I'm not telling you not to wear masks. But the purpose of this segment is you should always be allowed to challenge the status quo. When has this changed in America, where people's opinions based on tons of research and data and doing the work, they totally get dismissed unless it supports someone's agenda? And bring this back to finance and investment research. Imagine if I couldn't challenge the consensus with stocks, how to follow the advice of Wall Street, these institutions that are biased given they generate investment fees from companies they provide research for. You don't get more bias than that. Imagine if we weren't allowed to challenge that. We're allowed to say who's full of shit, which one of the things I'm doing, if you're a Curzio Research Advisory member, shorting our first stock. A couple of big hedge fund managers own it. 2 of the best hedge fund managers own it, and I think they're going to be wrong. Doesn't get more controversial than that. Challenging 2 people I really respect, I've talked about often. This is the first short I've had in Curzio Research Advisory, maybe the second. But you got to be willing to challenge the consensus. Always be willing to listen to the other side. And you do that with your investments, right? When you make them, you should be doing that as a business owner, because listen to the risks the other side are going to help you prepare for them or help even avoid them, which could result in a lot of your competition going under and you becoming an industry leader. Whoever survives on the other end, we've seen that with countless market crashes and recessions. And look at the leaders after the tech crash. Amazon's, Microsoft's. Reason why they have such strong balance sheets, because they lived through that time where they almost went under. But keep an open mind to what's going on, no matter who you support, what Democrat, Republican. No, it gets crazy. I mean, emotions get nuts right now. And I get it. I understand it. But in the end, the only thing that matters is you and your family. And I can assure you, politicians don't give a shit about that. They give a shit about themselves. They give a shit about power. And think about it. We can't even come up with a stimulus plan because we're arguing between 1.8 trillion and 2.2 trillion. I don't know what's in there and favors, whatever. But what I know is that there's people that are really struggling out there, and they need it. They need this money. And you're looking at restaurants. Yes, some of them are open. We're open here in Florida, one of the first since May. These guys aren't past 75% capacity. They have the table spread out still. A lot of these restaurants, bar owners, gyms, they only make money after that 85% capacity. They're not even there yet. They can't survive much longer. They're okay. They're afloat. Some businesses are thriving, but others aren't. But you really can't come to an agreement. If they really cared about the people, don't you think they'd come to that agreement if they cared about families? It's not. But do your own homework. Challenge the consensus. Don't believe everything you read or hear, including me on this podcast. Research everything. Fact check it. Because at the end of the day, if we find out that masks really don't work, or we don't really need them anymore, our economy is going to open up much quicker. It's going to be a big boom to so many stocks that have underperformed the markets, like airlines, cruises, casinos, even the oil industry, anything travel related. So pay attention to it. Don't dismiss it because you're watching someone that says otherwise or because you read one study out of 50. Keep digging and do the homework. I don't mind the criticism. FrankCurzioResearch.com. I'm here. That's okay. But again, I don't have an agenda. I'm trying to help you guys out. Been covering COVID since January. We've done a very, very good job. I feel like we're still ahead of the curve in everything that we've been saying. I take pride in this. But do your homework. Even if you disagree with someone, doesn't mean you have to hate them. Call them names, whatever. Just do the homework. Do your research. Keep digging. At the end of the day, it's only going to make you smarter. And that brings me to this week's guest. Someone that hasn't been on in a while. You're very familiar with. If you're a long-term listener. Glad he's back because one of the smartest stock analysts I know. Great connections, well-respected among institutions and the hedge fund community. His name is Chris Mayer. Chris used to write newsletters. Now he's a fund manager. Spoken at major conferences like the Value Investing Congress. Has a knack for finding stocks that are even off my radar. He's about to share some of those picks with us shortly. And in my educational segment, I'm going to break down earnings season, which is here. Right? Started, seeing the banks. Going to analyze a lot of those, which ones I like, which ones I don't. But there's a lot of companies that are set to report over the next 3 weeks. I'm going to highlight all those companies who are on deck, ones you need to pay close attention to, and also the conference calls I want you to listen to. They're going to give you a good indication, or us a good indication, of how economies are performing around the world. Which ones are spending more money? Which ones are not coming back as quick? You can learn a lot from the company of the conference call you're listening to that has operations in so many different geographies. But by listening to the names I'm about to share with you and listen to the conference calls and paying close attention, not just to earnings and sales and whether stocks go high, but listening to what they're saying about their entire industry, it's going to lead to dozens and dozens of new ideas. Something I do every quarter. Definitely pay close attention to this segment because I'm going to be mentioning at least 20 to 25 names. But first, let's bring in my friend, someone I respect very much as an analyst, and that's Chris Mayer. Chris Mayer, thanks so much for joining us on the podcast.
Hey, Frank, it's always good to talk to you. Good to be on.
It's been a while, man, right?
Yeah, I think it has been a while. I don't think I've talked to you since this whole pandemic hit.
Yeah, it's because you're like a fund manager now, right? I mean, in newsletter day, I had access to you. Now I don't have access to you as much, right? You're a fund manager.
That's right. We're at Woodlock House. That's the thing. It's all different.
Woodlock House. You know what? Let's start there, Chris, because you've been in the newsletter industry all your life. I love your work. Obviously, respect everything that you do. And now you're on the money management side, and it sounds like you're pretty happy about this, right? I mean, how are things going?
Yeah, well, actually, this is my third gig. So my first career was in corporate banking. I did that for about a decade. And then I did the newsletter thing for about 15 years. Yeah, and now I'm on to managing money at Woodlock House, which grew out of work I was doing with the Bonner family office, and the Bonner family seeded the fund. And we opened our doors in January 2019. So, yeah, I like it a lot. It's a lot of fun. It's interesting to do, of course, and really, it's not all that different. I mean, I'm still researching, still talking to a lot of the same people, not traveling because of the pandemic, but it's it's the same, a lot of the same. In fact, I own some of the names now that I had before. So, but it's fun.
It's funny you say that too, because you're one of the people. I mean, I always tell people how important it is to, boots on the ground, visit facilities, visit other countries. I forgot how much you actually do that. So it has to be tough for you, right? I mean, you're on the road like it seems like every other week.
Yeah, I was, and now I haven't been on a plane since March 3rd was the last time I was on a company visit in Milwaukee, and so everything else I've been doing by phone, and it's kind of interesting because I probably talked to more management teams this year than last year because they're not traveling either; they're available as well, and so I can recall specifically incidents that I have where I've emailed a CFO in the morning and I'm talking to him that afternoon. So everyone's got a little more time, I guess, and this is the preferred way to do things. And yeah, so it has affected me, but I don't know. I'm still getting it done, still getting the work done.
I know, right? It was find a way to get it done. So,
Yeah.
I mean, you mentioned COVID, and let's start there, right? Because we have stimulus coming out, not coming out, but we also already had like $6.5 trillion in it. What are your thoughts on COVID? What do you see next year, say after the election? We have the election, and even election. I mean, is that a big risk that you look at, or is it kind of, obviously there's a few sectors, depending on which candidate's going to get elected, and I know you don't want to get political here, but does that mess with your allocation or how you're looking, until I know you're mostly long term, but still, is that are you looking at the election as a big factor of who's going to win? And also, what are your thoughts on COVID heading into next year? Is this still going to be a major risk to economic growth?
Yeah, I think you hit on it when you said long term, because I think short term, yeah, it's a risk to create some volatility around the markets and certain names, but I'm not looking at anything saying, well, I want to own this if Trump is president, and I, don't want to own this if Biden's a president, or vice versa. So long term, it hasn't affected what I'm doing. I don't think it really is going to matter all that much one way or the other. I know people always want to say this election is important. Whatever election is, it's always important. But, you wake up the next day, you're still in the same house, still got the same stuff, you're still doing the same things. It doesn't really change that much. I think people overrate that. And in the long term, over the long term, I don't know that there's much difference when you look at, who the president is. On the pandemic, I think that's maybe more interesting question, because this is something that when it first hit, I was of the opinion that it would be a pretty quick correction, that things would be back to normal relatively soon. I can remember having conversations with people saying, by summer, this will be forgotten, everybody will be traveling again. And that turned out to be dead wrong. And I revised my opinion about a month and a half into it. So I have repositioned the portfolio quite a bit, but I do think that this has and will have permanent effects on some businesses, and that some things are just going to linger for a long time. Thinking about, say, the way restaurants are run, the way hotels do business, the way aviation is just going to be, it's kind of like when we had 9/11, there was the way you traveled before, and then there was the way after. Now people who didn't travel before 9/11 forget how security was before then, how easy it was to get in and out and get to your gate. But now it's different, and people just accept it. So I think there'll be a lot of things going forward that will be different with the pandemic, and people, because of the pandemic, and people just adjust. And I don't think this will be the only time that this happens. I've read a number of different research papers on this topic about how we should expect more of these kinds of viruses making leaps from, more of these kinds of things making leaps from animals to humans and wreaking havoc. So I think it's a new risk to underwrite. That's why I've told my partners it's something that, even though I've been in the business for 25 years investing, I've never had to invest through a pandemic. And now I have a new risk. So it's something I think about, how is this business going to perform if there's lockdowns, or if there's, social distancing or whatever.
Because I like the way you put it in terms of airlines. Like, people did forget, so I think we're almost, I don't know when it changed so much. I don't know if it's social media. It's all like an all or none, right? Yes or no world, where it's not that flying's not going to exist after September, but it's certainly changed. I mean, to the point, you're right. I mean, you can go on and strap a pound of marijuana, we'll put it underneath your shirt, and they'll be like, "Yeah, get right on."
Yeah.
Now, forget it. They're probing you. It's crazy.
Right.
So,
And I remember, even traveling in Asia, and you've done this as well, wearing masks is more common over there. You just see it. Someone's sick, they wear a mask, or there's it's different over there about it. And maybe something like that will be more common over here.
no, it definitely makes sense. So I want to get into. I think a lot of people were looking at as a value guy, and so many deep value managers. We do know deep value has been out of favor, or at least deep value names with little growth catalysts. But can you explain how it's important to even with your methodology? I've always noticed that, you're able to adapt to current conditions because, I've seen you recommend a lot of growth companies, even on this podcast. And a lot of those times that they're under the radar, even under my radar, which is pretty cool. I love to hear those ideas, but how important it is to adapt to the markets, even if it means going against a style of investing that you may have spent decades learning.
Yeah, you have to. You definitely have to adapt. I mean, otherwise the market just carries you out. So I know a lot of value guys who haven't been able to adjust to the new world and who still think things are cheap because they trade at 10 times earnings or less, and don't seem to really understand that the amount of capital required to generate those earnings is a big factor. And the capital light businesses are more valued than ones that require a lot of reinvestment. And there's other, these other little aspects that create value. So, you have to adapt. It's important to adapt. You have some core principles of things that you will always stick to. And those core principles for me are things like, how I always talk about the importance of having good owners and proper incentives. Those things stick no matter what. I've always been a guy who invests with strong balance sheets, companies that are in good financial position, don't have a lot of debt, and that's something that sticks too. I don't do that. But there are some things that you do have to change. I mean, think of all of the way markets have changed just in the last decade. You have passive, which has been dramatically bigger part of the game, but probably bigger and more important than that are interest rates coming down so low. And that changes the game too. I mean, you have to adjust now. Something that trades at 25 times free cash flow, that's a good business that's growing and has good returns on capital. That's probably a pretty good price these days. Dare I say even cheap. But that's something that would have been crazy to say, a decade ago, when treasuries were 4 or 5 or whatever. So you have to factor in the rates. That's one big thing.
Yeah, and I could tell you, I think it was from, let me see, it might have been Jeffries, I think. Someone did a really cool report just showing like the highest growth names and what they have in common to the rest of the market. They have the lowest debt levels. They're growing much, much more faster than the overall market. And
Right.
Good management teams. This isn't like the tech bubble days where, you had 5 pages to your website, you had $1 billion valuation. I mean, these guys are seeing tremendous growth. It's sometimes very, like, I don't know how you price it with Zoom and Peloton and things like that, but apparently as long as you're really growing a lot faster and bigger numbers, that's what the market wants to see. And it's important to make sure, I would think that, any new recommendation or something that you're buying has some kind of growth catalyst or growth component to it, right?
Yeah. I mean, I think also, I remember seeing an interview with Andy Suror, who interviewed Warren Buffett earlier in the year, and he asked Buffett if he thought the FANG bubble would pop and if those companies would come back. And Buffett said, no, quite the opposite. He said that those companies, their lead would widen. And that's because he pointed out that they don't require any capital. They don't really, they can continue to grow practically with very little capital or no capital. Maybe not Netflix, but the others, Facebook, certainly Microsoft and so on, Google. And so, that's an interesting moment. So he sees it. And, the big challenge today with investing is there's a lot of these kinds of companies. You mentioned Peloton. There's a lot of these kind of companies that are coming on that have these potentially big markets growing very fast, but maybe, the economics are not quite as clear. And, that's harder for me to play in that space where the company doesn't necessarily have good cash flows today or generate good returns on capital today, but they're investing a lot, and it's more of a forward story, and the valuation's so high, you know. But there's a sweet spot in the middle. You know, there's some very interesting growth stocks that I was able to buy and still get, 4 or 5% free cash flow yield, or 3, or even down to 3, but they're growing very quickly. They have great balance sheets, great managers, and I think over a period of time you'll do well in those names. You have to remember too, good businesses have a way of surprising you. One example I like to talk about or like to bring up with people is Amazon. When you think about it, started out selling books. That's it. That's what they did. And I remember seeing all kinds of analysts who would write reports saying, well, look how overpriced Amazon is. Even if they captured the entire book industry, the stock's still expensive. But obviously what people couldn't see is that they created entire new businesses and new markets. I mean, now AWS is one of the largest software companies in the world. That's embedded within Amazon. So you look at Apple, and they've created entirely new markets over the time. So good businesses can surprise you in that way.
Even Netflix. Remember they used to mail you movies?
Oh, that's right. Yeah, that's right. Netflix is another great example. Look at that. Look how they've transitioned. If you could have gone back and seen how they would evolve. I mean, it's amazing.
Yeah, it is pretty incredible. So we talked about this earlier when it comes to investing globally. And for you, you're one of the people I listen to the most when it comes to global investing because you do so much traveling, which you said, you're not really doing as much, but at least you're able to contact a lot of people, through Zooms and Skypes and things like that. But we're all seeing massive stimulus plans from most central governments. Looking at COVID, the death rate as a percentage is heading lower in lots of regions. Is there any specific country or countries you're looking at that offer, great value to investors, which a lot of them are trading at a good value, but also have that growth potential?
I don't know. I think about it quite that way, where I would think about it as a country as a whole. I mean, if I look at my portfolio now, the biggest holding I have is listed in the UK, but it's not like necessarily I see the UK, as a country having a lot of growth, et cetera. But this particular business has a lot of potential there. I also have a business listed in Italy and in France, but they're more, international operations. So I think there's a lot of interesting things to poke around in Western Europe, and I think that's a market I like because the disclosures are often pretty good, and everything's in English, and so that's not as much a culture shock to invest there. But I would love to find something great to invest in say, I don't know, India, but it's difficult,
Yeah, it is definitely difficult. So I'm gonna put some pressure on you here because every time I introduce you, I'm like, Chris always gives us these under the radar names that a lot of people never heard of or whatever. So I don't know if you have any of them, but
yeah.
And I know you love sharing some of your ideas, but
Sure.
if it's not under the radar names or trends that you're following or
right. Well, I could give one under radar name perhaps. Well, it's on my mind this morning because Devon Energy said they're going to buy WPX. It's kind of a big push in the Permian Basin in Texas, and this follows on another deal too. I forget. I think it was ConocoPhillips talks to buy Concho Resources also in the shale. So oil is not very popular right now, and oil's come way down, but the Permian Basin has some of the lowest costs in the country. And there's a company that I like, I own there, called Texas Pacific Land Trust. And they have, it's just a royalty play on the oil and gas. They own the land. So companies come and drill there and they get a little piece off the top. And the economics of doing that are really, really high. I mean, their return on capital in some years pushes 100%. It's extremely cash generative type business. They have no debt. And so I really like that. It's come down a whole bunch. It's cheap now. They also have a water business. So not only do they get a cut of the oil that comes out of their land, they also help with, they also provide water and then recycle that water and sell it back again. And so that's a really interesting one. And there's also some movement now going on with the company's converting from a trust to a C Corp, and that will happen at some point in the fourth quarter. That'll be a nice catalyst. There's activists involved led by Horizon Kinetics, which owns a quarter of the stock. And I think what you'll see then when they convert, you'll see better disclosures. You'll see a big buyback announced, I'm sure. And I think that one's a nice one to hold long term because, at some point the situation will look better for oil, whether it's next year or the year after. But in the meantime, you own a debt-free company that throws off a lot of cash and has tremendous, economics. And if oil should ever go up again, this thing will multi-bag from here. So that's one I think that's and of course, full disclosure, we have it in the fund, so I own it, and I like that one.
So it's funny because Texas Pacific Land Trust, my late dad, it was one of a recommendation that he's followed for probably 30, 35 years. Very familiar with the story, like the whole entire thing. I'm going to say his research on it because it's pretty incredible. He's recommending the single digits, and I think my mom still owns shares. She still owns shares of that from 30 years ago. But just it was a self-liquidating trust. It's from the railroads put together. They went bankrupt and had to pay their owners. So basically, all the money they generated from royalties, they basically had to buy back the stock. So it was like 2 million shares outstanding, but. To see where that company went and when I think it was an $800 range or whatever. I know it's pulled back, but yeah, that's a name that's dear to my heart because I still get people who found my dad for a long time ago. Older investors always say, "Land Trust, you still own."
Yeah.
It is a fantastic story. I got to send you the research though. It's pretty cool to see the research back then.
Yeah, that's cool.
Awesome.
Yeah, I think that's an interesting one. And seems like it's hard to screw it up, right?
Yeah, especially at this point. You're right.
I mean, there are other
Mhm.
interesting things to own that I think, if you've got a long-term focus and you're counter-cyclical and you want to invest, in some of the things that have had a tough year now, I think, I always like a company called Exor. It lists in Italy. It's also, there's a pink sheet in the U.S. you can own. Exor, EXOR is the name of the company. And it owns, among other things, owns Ferrari, which is a great business. And then it has a reinsurer and it owns a piece of Fiat Chrysler and CNH Global. But anyway, you add up the market value of its holdings, and stock's probably 75 or so euros, and the Exor trades for around 47, 48. So you get a very good discount there. And John Elkann, who is the CEO, he is one of the better capital allocators around, in my opinion. The Agnelli family owns half the stock, and they just announced buybacks. So that's another one I think downside's pretty low, and you've got really nice upside there if things bound back to normal. So there's a couple of perhaps under the radar names that I like that maybe your listeners will find interesting.
Yeah, no, definitely. That's definitely under the radar. So that's cool. And yeah, they like the pink sheets too, because it's not that easy to buy stocks, in Italy. But
right.
All right. So Chris, if someone wants to learn more about you, because I just, I asked you that question now. I was like, how before we actually got on, and you told me, to Woodlock House. But I noticed that you have a blog on there, right? Which is cool.
Yeah. Yeah. So I write a blog. I try to put something out every other week. But yeah, I mean, if you just Google Woodlock House, it comes right up, Woodlock House Family Capital, and you'll find the blog. And so what I write there, I write about sometimes names I own, sometimes names I'm looking at, and I share some research that I'm doing. Last time, for example, I talked to the treasurer of Old Dominion Freight, and I wrote some notes from that on the blog. And then I'll write about, books or other interesting ideas that come up. So yeah, people can find me there. I'm also on Twitter at Chris W. Mayer, Mayer. Those are two ways to find me there.
No, that's great stuff. And I love that because usually when I'm interviewing someone, I'll take like a half a day to read everything they wrote over the past few months. And I'm like, Chris, where are you?
Yeah.
And you're like, let's just freestyle. I'm like, okay, we're good at this. We could just freestyle and go into everything. But see that like a lot of this stuff is and that's at woodlockhousefamilycapital.com, but you just put in Woodlock House.
Or you can just Google Woodlock House and Woodlock, my Woodlock House comes up first. So and you can find the blog there. Yeah, I've written about last time I wrote about sort of the scarcity of industrial land. There are a couple of companies that have locked down land close to big cities. It's very hard to replicate. And a couple weeks before that, I wrote a piece on the big picture talking more about interest rates. And I've had other little profiles of companies and ideas before that. So it's fun to write, and I just sort of write it when I feel like I have something interesting to say, but it usually comes out about once every other week.
No, it's great stuff, Chris. And listen, I love having you on. I got to get you back on more often because, again, I always love your ideas. I respect you as an analyst. I think you're fantastic. I always learn something when I talk to you. So I really appreciate you coming on, man. I really do.
Sure, man. It's fun. Always talking to you. And yeah, we'll have to do it again.
Sounds good, man.
After these ideas, play out well and double, then you can have me back on.
If they go down, I'm going to have you back on.
That's right.
But that's great stuff. So, Chris, thanks for being on, and we'll have you back soon.
Take care. Bye.
As always, great stuff from Chris. Miss having him on. Always sharing new under-the-radar ideas. But again, I'm truly honored to have him back on, to be his friend. I mean, he used to be a newsletter junkie, and the reason why I say I'm honored is because he knows so many people in our industry that are great analysts, hedge fund managers, and a lot of these people, not really hedge fund managers so much, but the analysts, money managers, they don't know how to market themselves. And these are people that have great track records, but nobody really hears of them. They don't know how to market themselves like others who know how to market fantastically, who will just take a guy up the street that you never heard of and say, this is the greatest investor you've ever seen who made billions of dollars for all the institutions. And when you do a Google search, there's nothing to be found about that person, right? They're just very good at marketing. But the people that he's introduced me to, he passed a lot of those people on to me, knowing that Curzio Research could help them and bring value to our subscribers, our listeners. So, I use that word. I don't use it lightly, but honored. Give that Chris, like me, knows every analyst and publisher in the newsletter industry. But, to have that kind of trust from me and Curzio Research and what we're doing here, and introduce our firm and me to his closest friends, see if we could help him out or get this stuff published out there. It's just really, really cool and something I truly appreciate. So I want to thank Chris for coming on. I always say this. I love the interview. It doesn't matter what I think. This is about you. Let me know what you thought. Send me an email at frankcurzioresearch.com. Now, let's get to the educational segment, which is earnings season. Thus far, numbers have been pretty solid. Solid because they're beating super conservative estimates. But more important, one of the biggest trends that I'm seeing is many of these companies are now offering guidance. And that's being rewarded, right? Because that creates certainty. If they're giving you guidance, you could actually model how much they're going to spend in R&D, on marketing. You had no clue. And the market went up with these companies saying, here's our numbers, and we have no idea what's going to happen next quarter, maybe next 6 months. And people didn't care because you just threw $6.5 trillion. The Fed threw $6.5 trillion at the market. Didn't really care too much. They'll prop up a lot of these names, but that's one of the trends I'm seeing. You look at one sector, which is large cap banks. Most reported less than stellar results. And JP Morgan was okay. And Citigroup, Wells Fargo, Bank of America reported weaker than expected numbers, which was mostly due to low interest rates, which is interesting because interest rates are going to stay low for a very, very long time. But also larger than expected provisions to account for potential credit losses. These companies aren't buying back their stock. They're not raising their dividend. They have low interest rates. That interest rate, low interest rate, it's important. I mean, higher interest rates is very, very good for the banks. Their net interest margin increases, and they make a lot of money. So not too keen on the large banks so far. Goldman Sachs, on the other hand, blew out the numbers. They're an investment bank. They don't rely on those low interest rates for profits. And Goldman Sachs numbers shouldn't surprise you if you follow my newsletters. I mean, it's not a traditional bank. They thrive in environments where there's huge volatility and tons of liquidity. Two factors that are going to be around for a very, very long time. So we got Goldman Sachs, Morgan Stanley. These are names that are cheap based on price to book, PE, and will grow significantly faster than the overall market, at least over the next 12 months, more likely over the next 24 to 36 months. So get used to these blowout earnings and sales beats. I think both of those names are cheap. I really like Goldman Sachs. But more important, earnings season, the next 3 weeks. Lots of companies are reporting. So today after the bell, United Airlines. Numbers are going to be terrible. They better report terrible numbers because they're asking for more money from the government. That's what Delta just did. Numbers were bad. They're not going to report great numbers. They say, we might have to lay off. We might have to do this. They're going to, play it so they're going to get money from the government. Taiwan Semiconductor, largest manufacturing chips in the world, the most fab facilities. They're going to report tomorrow. Definitely listen to that call. Lots been going on with China. Big speech made by the president. And, a lot of chip companies, it could impact. There's a lot of news going out. You're seeing animosity between China and U.S. right now. But Taiwan Semi, and they manufacture chips for Apple and dozens of major companies. Definitely listen in to that call. Very important. You'll get a good indication of what's going on, not just in China and all of Asia, Europe, there, every place. JB Hunt, trucking. That's on Friday. Are we seeing a pickup in demand, which is a good indication of the economy rebounding? We hear that the economy is rebounding. It's rebounding. We should be able to see through trucking companies. We've seen numbers from FedEx that blew out, incredible numbers. UPS. Transportation companies. Pay attention. On Monday, Halliburton. This is a call I want to listen to since there are a lot of bulls coming out of the woodwork on energy. We had Chris McIntosh on. You say how bullish he is on energy. I'm not too bullish on energy, but I think there's other sectors that will benefit well ahead of energy if the economy does open back up and gets busier. But these are one of the largest oil service companies, Halliburton, along with Schlumberger. But I want to hear what they say about demand in the U.S. and abroad, and especially what they believe on fracking. If they're worried that a Democratic win could result in considerably less fracking over the next 4 years, which is a massive profit generator for these guys. I'm not being political here. We just know that what was said 3-4 months ago by the Democrats running is that we don't like fracking, we don't want it. And now they just said, no, just on federal. And then you have the left saying, no, fracking's really bad. I want to see where this goes. I don't know if they're going to ban all fracking. I don't think that they would do that. I hope they don't, because they're going to lose millions, if not tens of millions of jobs. But Halliburton should have a good indication. I want to hear what they say. IBM's on Monday, October 19th. I want to learn more about their restructuring they just announced, spin out its fast-growing divisions like cloud, data analytics, social. That should be exciting. Lockheed Martin, Tuesday, October 20, one of the large defense companies. Defense companies have been pulling back. Are they worried about spending being impacted based on who wins the election? If so, this is going to impact R&D for the entire sector. I want to hear what they're saying, what their beliefs are. Because a lot of these companies are going to be asked by analysts about, what happens with a Democratic win? What happens with a Republican win? Are you going to spend money differently? And some of these companies, I would say most of them are going to say, nope, business as usual, this is what we're going to do. But there's certain industries that are going to be significantly impacted. Significantly impacted. Major tech companies, you're looking at October 29th. Pretty sure all of them are reporting October 29th as of now. Apple, Amazon, Google, Facebook. You also have Netflix on the 20th, Microsoft on the 27th. These are the biggest companies, trillion-dollar market caps for some of these guys. I want to see their numbers, especially Apple with the new iPhone coming out. Where's demand? Where's their guidance going to be? They better offer guidance. They should be offering guidance this quarter. Amazon, how did Prime Day do? Facebook, political ads, what's going on? Banning them, not banning them, it's a big source of income for them. The recent reports by Democrats and the Republicans saying that, they want the Justice Department to regulate these guys and go after them, which is interesting because all these companies donate, tens of millions of dollars to both parties. Most of them going to Democrats now, but still, it's amazing how, I don't know if it's helping too much in terms of getting these guys on your side or bribing them, right, which is lobbying. Disney, a little bit later, it's about early November, but I'm very curious to see their numbers, which their streaming numbers are going to be up a lot. They're going to highlight this. But what are the numbers for Mulan? We didn't hear that, right? $30 to subscribe, something different. Could it change the industry? We didn't hear anything about it, so I'm not expecting much. How does this company plan to generate billions of dollars? How are they going to generate the billions of dollars it needs to spend on new content, given that every other division within Disney is struggling mightily, and the one that's doing good is the biggest money-losing division by far. And they just said we're going to go all in, which means you're going to lose a lot more money going forward, at least over the next 4 or 5 years, if they ever become profitable with that division, which is going to lead to numbers coming down probably. But I want to hear how they're going to generate the billions it needs on that new content, because you're looking at those divisions that are struggling mightily. They're going to continue to struggle at least over the next 6 to 9 months. They're going back to 80% capacity at any park soon. I can see people on Broadway, going to Times Square to get tickets. Movies, people going to theaters. It's not happening anytime soon. Not to the point where it gets to 80% plus capacity. You have Cummins, truck engine manufacturer, October 27. GE, it's important to listen to GE call. Not for GE as an investor. They have operations all over the world. It's one of the best conference calls you could listen to. They'll give you access to numerous industries that they're in. Zoom's on December 3rd. That's a little bit later, so curious to see their growth numbers. I said Zoom growth numbers. I've never seen growth numbers like that over pretty much a 3 to 6 month period in any company ever. It's just unbelievable. ExxonMobil later this month. Diamondback Energy. Let's hear what these guys have to say. Again, I want to learn more about fracking and how they feel about the oil market. Are they pulling back? Are they adding rigs? Humana Healthcare, November 3rd. Triton International is an interesting company, October 23rd, one of the largest container rental leasing companies. We've seen exports surging out of China. Is that filtering down to the U.S.? Kind of is. I mean, we've seen ports all over the country reporting record demand. Again, another company that can give us a great indication or information about the current economic environment in America and also abroad. That's what you want to do during earnings season. If you're a true investor, I'm telling you, you want to listen to conference calls. You don't have the time to listen to them. You can download the transcripts. It's easy. But pay close attention to this. It'll lead to numerous ideas. Even if you don't like Triton, if you listen to it, you're going to understand where the growth is coming from, which economies are doing good. It can lead you to buy ETF in China, in wherever. But it's important. You get an amazing, amazing outlook on what's going on around the world listening to certain companies, a lot of those companies I just mentioned. So please pay close attention. You're going to hear me mention that in podcasts. You're going to hear me mention it in newsletters. But earnings season should be very, very interesting over the next 3 weeks, hoping that most of these companies provide guidance. And let's see how they finish, because most of them are going to be beating current estimates or street estimates because they're very low right now. So it will be interesting heading into November 3rd election. A lot going on, but definitely follow these companies, or at least try to read the transcripts of these calls that are all going to happen pretty much in the next 2-3 weeks. So guys, check out my free report, Curzio Research. Let's go to our website, CurzioResearch.com. It's called The Third Option. A lot of demand for it. You look at stocks, sectors that are going to benefit from a Biden win, a Trump re-election, but the third option, which is chaos and uncertainty, which means we may not see a decision on this, or people might not believe it, and that uncertainty could result in the markets coming down. So I cover all this absolutely for free on our website, CurzioResearch.com. It's a pretty good report. I spent a lot of time on it, covered lots of stocks, lots of sectors. If I had to guess, I'd say more than 50 stock recommendations are in there. They should focus on based on a Trump win, a Biden win, also that third option, how to make money if that happens and we see uncertainty. Because if we do see this last for weeks and then months, believe me, the market is going to come down. How do you protect yourself? How do you make money? I explain all that in that free report. Also, Curzio Research YouTube page. We have lots of cool videos. Going to be doing pre-market videos soon, like telling you what's going on, maybe 8, 9 in the morning. It's only going to be found on our YouTube page. So be sure to subscribe. And that's for free, because this is fresh content. You're not going to find this on the podcast. Yes, you'll hear me mention it if you're a subscriber and things like that. But a lot of this is fresh content you're not going to hear on the podcast. You can find a lot of stuff on our Curzio Research YouTube page, which we're going to be doing interviews and doing podcasts through video format. We just really focused on a video, and it's been the feedback has been absolutely amazing. So really, really cool. Last thing here, I'm presenting at the Money Show, which is virtual event. And that's going to be tomorrow at 2:10 Eastern. So be sure to sign up. We'll talk about new asset class. That's the title of it. Will this new asset class be the end of the New York Stock Exchange? You guys know what I'm talking about, since you follow me. Talk about security tokens, how this new technology, which I'm using myself, launching on Curzio Equity Owners Token, which is about to go free trading this month. But how this technology can provide you with a way to get in early on some of the biggest growth companies in the world. It's going to be a great, great presentation. And last thing here, Curzio Research Advisory subscribers, going to get 2 new picks later today. It's going to be available. It includes an amazing growth and income name, huge growth potential, company that's been beaten up, starting to come back now. He's a high dividend, the S&P 500. Those are new growth stocks. And the other recommendation is the first short ever. Pretty sure it's the first short. I did buy an inverse ETF once in this newsletter, but basically the first real short. And this name is one of America's favorite companies. I told you guys at the beginning, always challenge the consensus. Let's just say that with this recommendation, to short this name, I'm jumping with both feet here. It's going to be controversial since 2 of the biggest hedge fund managers in the world just went along this name. And I think they're going to be wrong. It's a great issue. It's a video issue. You can follow along all my research, but it's going to be out later today. You should get it around 6 p.m. to 6:30 tonight. So, guys, thanks so much for listening. Really appreciate all your support. And I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.